Okay, so what is a reconciliation per se, and how does it, like, when we talk about creditors? Okay, we know that businesses that buy and sell on credit, they keep what? They keep a creditor's ledger, which contains the individual accounts of each creditor. So yeah, so this is just basically, if you know what a creditor's ledger is, then this should not be a hassle for you. Okay, so a creditor's ledger usually contains things such as, like, it has an opening balance, it has the invoices issued by the creditor for purchases made, any returns, any allowances, including things such as even payments made to the creditor, your discounts received. Okay, things to note here, like, don't forget that when we talk about when we talk about these things, think of, because you know that creditors already, they are liabilities, right? And then this side, you know that they increase on which side? If it's a liability, they increase on the credit side, right? And decrease on the debit side, right? So you know, obviously, like, if there's an invoice issued by the creditor for purchases, if we made purchases, then it means what? The purchases are most likely to do what? To increase what? Our account. They increase on what? On the credit side. Like this, right? And then you know that if it's a return, obviously return, it means that maybe we're not happy with whatever that we bought, right? And if we're not happy with what we bought, we have to do what? We have to return it. If we return them, they do what? They reduce what we owing, right? So it will be on the debit side, right? Same thing as the allowances, returns and allowances, we sometimes use them interchangeably, right? Sometimes they can be, it's basically used interchangeably. And then here we have payments made to the creditors. If we decide to pay back what we owing, if we pay back what we owing, it's going to do what? It's going to reduce what we owing. So it's what? It's going to be on our debit side of things, right? And then here we have what? We have discounts received, right? If we receive a discount after making a payment, it means what? It means that then we, whatever that we owing, it's further what? Reduced, right? So this is what? It's on the debit side of things. Okay, I hope this sort of helps you out to make sense of things. Okay, so let's move on to the next section of things. Okay, and then here we have what? We have a copy of the account received from the creditor supplier at the end of the month. Okay. Very important things to note here is that when we talk about a creditor's ledger, is that it's what? It's usually presented in 3-column format instead of a T account. The T account that I just drew here, it's not how a creditor's ledger will look like, but instead it will have what? It will have like 3 columns. 3 columns, I mean that it will have maybe sometimes, like, we have the description side, we have your debit and your credit, and then sometimes you might have like the balance at the end, like the balance column type of a thing. It's what? It's usually 3 columns per se. Yeah, I hope it explains everything. Okay, let's move on to the second thing. Okay, the second thing to note now is what? It's the creditors list. Okay, a creditors list is something that a business will have if they're owing something per se. Yeah, so they will have the list, like, maybe there are few companies that they have debt with, you get it? So they have a list of all the companies that they have with all the balances and everything, the names of the companies and all of that. Okay, let's see. Okay, so basically here it's what? It's a summary of all balances we owe, right? All balances owed. Then we have what? Balance of least must balance with creditors control balance. Okay, and then we have what can draw up control balance from list balances. And then we say that we want to know how much we owe an individual, such as creditors, right? Check individual creditors ledgers. So think of it this way. There is a creditors ledger, right? And then there is what? There is the creditors list. Somehow we would have to compare and see if the list that we have with the summaries of balances owed kind of balances with what we have on each creditor's ledger for each creditor that we have. If it doesn't make sense now, it's okay. The more you do the activities, the easier it will get. And then here we say that if you want to know the total you owe all your creditors, you look at what? At the creditors control account. Okay. If it doesn't make sense now, it's okay. Okay, so for control purposes, the control account must always be in balance with the creditors list. So you have a control account versus what? Creditors list. Do they balance? If they don't balance, then you have to do what? Investigate. Why is it that I'm looking at my control accounts, right? And I'm looking at the creditors list, right? And I'm noticing that they don't balance. Then I have to do what? Investigate. What are we investigating? Why are they not balancing, right? There are a few reasons that could actually make them not balance. One of them is what? Is either there's an error. You get it? Errors can be maybe there were wrong amounts that were entered. Like, for example, we owe 210 rand, but somehow our bookkeeper decided to put 120. You get it? So obviously they're not going to balance, right? And then we're saying wrong amount entered, of course. And then we have what? Transactions have not been processed. Sometimes this is what? Something happened, maybe we paid the deposit, but we didn't have time to record it, or it was almost at the end of the month, so this transaction is not processed. So obviously it means what? It means that there's not going to be a balance, because remember, this is a scale. As you remember, the T represents a scale. So this side must balance with the other side, kind of thing. Okay, and then we're saying errors or omissions may impact. Obviously, if these things are the problem, then it means that they are most likely to affect what? Our control accounts, right? Or individual accounts. Control account may have like a lump sum of the creditors control, you get it? And then we have individual accounts per creditor, I almost say data, per creditor. Or either they can affect both accounts. Okay. So now we will try something practical, what we were talking about, and now looking at it in a practical sense. Okay, here we have two people here, right? We have rainy wholesalers, right? And then we have swart suppliers. Okay, so here's the thing. When now this is you writing your exam or you're writing your control test, this is how you look at it. Okay, so rainy wholesalers, it's a wholesale. Already you know that if it's a wholesaler, they are what? They are more like the people that get to meet the customers, right? So they are like the final stop when it comes to like, okay, not technically final stop, but it's more like they sell the things to customers, right? So if they sell the things to customers, there's a good chance that they buy the things from somewhere else, right? Who is what? Their supplier. So as you're looking at this activity, I want you to take it as you are rainy wholesalers, right? And you are communicating and you're buying the things from swart suppliers. Okay, so I will just say, I'll use the pronoun we. Okay, whenever I'm talking. Okay, so now, remember, we reconcile our statements every month. Right, so monthly we do what? We do our reconciliation. Okay, so now this balance is on the 1st of May, which technically means that this is like the closing balance of April, right? So May, we have a balance which is brought down, obviously, which is 4,200, right? Okay, while we're there, then on the 8th of May, because like we're a business, so transactions will always happen. You get it. If we are out of stock, we have to do what? We have to stock things. Just like that. So now we did what? We issued an invoice number 25 for how much? For this amount of money, 5,100. So in the laws of debits and credits is that if this one, it's what? It's an invoice. It means what? It means that we bought more goods. We took more goods in credit. So now we owing what? We owing more to what? To SWAT suppliers. We as Rainy bought more goods from SWAT suppliers. You get it? So hence it's where? It's on the credit side of things. So if it's on the credit side of things, it does what? It increases what we are owing what? SWAT suppliers. I hope it makes sense. If it doesn't make sense, you do what? You pause the video and try and make sense of it, or you do what? You rewind the video to make more sense of it. Okay, and then now we what? On the 10th of May, what happened? Transaction happened. We issued what? We issued a check. If we issued a check, something that needs to ring in your head is that is what? That's payment, payment, payment. Okay, you see, it even tells us here in the folio side of things, it's affecting our CPJ, which is our cash payment journal. Okay, remember this one, the invoice affected what? It affected our creditors journal, right? So our creditors journal was increased, right? Here there is a payment. A payment does what? If it's a payment, then it means what? It's reducing what we owing. You get it? So remember, what is it? Liabilities, they increase on what side? On the debit side of things. So if we had 9,300 that we owing, what is it? SWAT suppliers, and there was, we paid. You get it? So if we paid, then it means what? It means that we say 9,300 minus 1,100, and obviously it does what? It reduces what we owe, and now we are left with what? We are left with 8,200. Okay. Okay, so we are continuing, and then now we move on to what? Now suddenly on the 15th something happened. There is what? There is debit note number 2. So CAJ means what? It means creditors allowances journal. So allowances, remember, these are what? These are the returns, the things that do what? They end up reducing what? Our creditors. And you remember, don't forget, that allowances or returns, they affect what? They affect us negatively. Kind of a good thing, the fact that they reduce what we're owing, but it's not, you get what I'm saying. So they are on our debit side. So since they are on the debit side, so basically it means what? It means that if we're owing 8,200, we'll say minus 500 Rand, and then we're left with 7,700. Okay, and then now we have what? We have invoice number 33. Remember, invoice. Right, if you still remember, invoice. So it means what? It means that we bought something, right? And we bought it on what? On credit. So it kind of does what? It kind of increases our what we owing. So they increase on what? They increase on the credit side. So CJ means what? It means creditors journal. Okay, so if it's a creditors journal, obviously it's going to increase on the credit side, and hence now we say 7,700 plus this, and then we have what? We have this one here. Okay, and then we have the last one, obviously, which is the check, right? As you remember, with the check now we have to do what? obviously it's what? It's a payment, right? And if it's a payment, it's affecting what? It's affecting our CPJ, which is our cash payment journal. And it's since it's a liability, it does what? It's going to be reflected on our debit side because it reduces what we owe. Hence, if you say the 4,200 minus the 11,300, you're left with 7,100. Okay, so this is what happens in what? In the creditor's ledger of what? Of Wayne. We are Wayne and we are owing SWOT suppliers. Okay. Let's move on to the next one. Okay, so this one now, it's different, right? Remember, we were dealing with the internal, how we record the things within the business, like an internal control measure. This side, we classified ourselves as rainy wholesalers, right? And we owing SWOT suppliers, right? Okay, let's see how SWOT suppliers will record things in their own books, which is what? The statement that we are supposed to receive from SWOT suppliers. Okay. So here we have what? We have the statement from SWOT suppliers. Don't forget, like if ever you're struggling, you're confusing the things, remember, anything that says statement, it's from what? It's not something generated within the business, in the business, but it's something that is what? That we receive from outside. If you were doing your what is it? Your bank reconciliation statement. So if it's your bank reconciliation, then it means what? You will recognize a statement from the bank. You get it? As something from outside, something generated from outside. But this side, it's what? It's a statement from what? From the creditors. Okay, so we have, like, this is the statement. This is what we're looking at. So things are different on this side. Remember, if we owing them, on their side, they take this debt as what? As an asset. It's money they're expecting to receive from us. You get it? So they treat everything as what? As an asset. This is what? This is their debtor. We are a debtor to what? To SWOT suppliers. Okay, you are more than welcome to do what? To just like play the video using 0.75 speed. You get it? If you use 0.75 speed, then it means that I'll be speaking a lot more slower, or you can just like rewind the video to make it make more sense. And as you listening to the video, you're doing what? You're writing all the questions that they have to ask for you, for assistance in the Ask Me Anything sessions. Awesome. Okay, so this is now like we're looking at the statement how SWOT would have recorded things, right? So they have an asset, right? So they're expecting to receive this amount of money in the beginning as we're opening the books, right? Remember, assets, they do what? They increase on the debit side, right? And they decrease on what? On the credit side. Okay, so now we have what? Okay, remember the 8th. On the 8th, what did we do? Okay, I'm just going to do this on the 8th, right? I'm just going to just keep moving from one slide to the next. On our side, we issued an invoice, right? And we issued an invoice because we decided to take more goods from what? From SWOT suppliers on credit, right? So as we took them out, what did we do on our side? Obviously, we were increasing what we owing, right? As we increase on what we owing, we put the 5,100 on our credit side of things, right? Okay, what did Rainy do? Rainy recognized that, oh yeah, they took, oh sorry, it's SWOT. What SWOT did was like, yes. They took goods indeed on the 8th, right? For invoice 25, right? And for how much? For 5,100. So Rainy recognizes this as an asset. Wow. So basically they're saying, there's more things that they are owing us now. So this is an asset now. It's money we're expecting to receive. You get it? As what? As SWAR suppliers. So obviously then it means what? It means that it will be on the debit side, which is the plus. And then we say 5,100 plus the opening balance, and then we have 9,300 out of that way. And then what did we do here? We decided like, oh, okay, we have enough money. Let's just see if we can pay back some of the debt to reduce the debt. And then we decided to pay 1,100, right? And as we paid, technically it reduced our debt from the 9,300, right, to 8,200. Let's see what SWAR did in their books. They recognize that, yes, indeed, there is a payment, right? So we issued check 100, right? They received the check, right? But it's a receipt now for them. For receipt 88, it's a receipt for them. So now what did we issue? We issued a check of 100, okay? And then they did what? They put that amount on the credit side because what? It's because like what they are going to be receiving now, it's reduced. You get it? So they've received technically this, like it's reducing their debtors, basically, because we are debtors to them. You get it? So anything that is most likely to reduce their assets would be like the receipt from debtors, technically as we debtors. I hope the terms are not confusing to you. Okay. And then there was a discount that was allowed. They allowed a discount, you get it, of 100. Did we recognize the discount on our side? Let's check. We didn't recognize any discount this side. You get it? So since we didn't recognize a discount here, already there is what? There are red flags. I don't know if it makes sense. The red flags, it means what? There is an omission somewhere of what? Of a discount that was allowed. Interesting stuff, right? Okay, let's continue. And then they saying what? They're saying on the 5th then something happened. There is a credit note. Remember, credit note signal what? Signal a CAJ folio. CAJ is a Creditors Allowances Journal. Creditors Allowances Journal is what? It's for returns, right? On the 5th, then let's see what happened on the 15th on our side. Yes, we recognize a debit note on the 15th, which is debit note number 12 for 500 Rand. Okay. For 500 Rand. On their side, they recognize a debit note of 20. So here there is an error here. It's supposed to be 1212, right? But anyway, and then for how much? For 500 Rand. So we can recognize what? We recognize the 500 Rand, right? It's the same on our side. It's the same on their side as well. Okay. And then now they're recognizing invoice number 33 for 25, the date of the 25th. Let's see if there is any transaction on the 25th. Yes. Invoice number 33 for how much? For 3,600. Okay, let's see. 3,600. Yes, remember invoice, it means what? It increases the asset, their asset. You get it? It's an asset. It's a debtors. Yeah, it's an asset on our side, on their side. So it's what? It will say 3,600 plus 7,600. And then we have what? We have the 28th. 28th is what? Invoice number 34. Did we take anything on the 28th? Let's check. That's interesting. You see, like on the 28th, we didn't buy anything according to our books. We didn't buy anything. Instead, we did what? We paid back what we were owing. So there's supposed to be a receipt on the 28th on their side for 4,200. You get it? But on their side instead, they have what? They have an invoice of 34. So there is an error, an omission that needs to be fixed between the two statements, the statement versus what we have. Statement is what we are receiving from our creditors, and then this, which is the creditors ledger, is what we prepare internally. Okay, pause, calm down, and let's make sense of it. This, which is the creditor's ledger, is what you prepare in your business. You get it? This is what you prepare. Creditor's ledger, you prepare you yourself in your business. And then your what? The statement is what your creditor, the people you owe. Yeah, I like it that way. The people you owe is what they do, what they prepare themselves. Picture this as like if your family members have an account with Woolworths, or maybe okay, there's no longer Edgar's, but yeah, so every month, as you remember, especially for church, yeah, let me use church. Every month there used to be the statement that will come with that little nice magazine. You get it? There's a statement of like transactions, the things that we owe Jet. You get it? So that's what we're talking about here. It's prepared externally, the statement, and what? And the creditor's ledgers is prepared what? Is prepared internal. So now the reconciliation is what? We need to do what? Somehow have a same balance at the end. If you notice here, we have what? Our balance at the end is 7,100 versus the statement from SWAT suppliers is 11,800. We have to reach same balance on the creditor's ledger, same balance on the statement. If it doesn't balance, then we have to do what? Our reconciliation to correct the differences. If you master what I'm saying, this thing, you will enjoy it so much. This is where you bank your marks, because like the more you do it, the easier you'll see it is. Okay, so I'm not gonna go through this one. Yeah, I think this is what I was talking about just now. Okay, so let's move on. Obviously, as I did say that site, that there was suddenly a discount of 100 Rand that was not recognized. You get it? On our side, we don't have it, but they have a discount on their side, the statement, you get it? So we have to do what? We have to correct and make sure that we recognize that 100 in our, in like, yeah, as we correcting the things. Okay, so now we are here on like your reconciliation example. So now we are doing what? The reconciling. How we reconciling? Okay, first thing first, we have to recognize the deposit. What is it? The discount. That 100 Rand discount that was shown in the statement but not shown in the creditor's ledger. You get it? So we have to do what? We have to recognize it on our creditors on our side, because our statement says we receive a discount and we recognize there's a discount, so we have to do what? Add it in our creditors ledger. Okay, what else? So now this is our reconciliation here. So things that were on the side but they were not on the side, type of a thing. If it was possible, let me see if I can go back. So what's this? Basically, the question is like, where are we getting the check 1110, which is outstanding? You get it? So remember, now we are on to step 3. Remember, step 1 was the ledger account, right? Step 2 was what? Was checking the statements, right? And then step 3, now we do what? We prepare the reconciliation. We recognize the differences. So our reconciliation will start with what? We will start with the balance at the end of what? Of the statement. Balance at the end of the statement, which was 11,800, and then we start recognizing all the differences. Okay, so let's go back and see if you still remember where these amounts are coming from. Okay, so this balance here, so the 11,800, it's going to be the opening balance of what, of our reconciliation, right? And then after that, remember, there are certain things that we noticed that were recognized there, but they were not recognized on the other side. So there is 11,800 from the bank statement, right? What else was not there? Obviously, on the 28th, we recognized that on the 28th, we had a check here, right? A check whereby, remember, a check admits that we made payment. Okay, let's see if we can do it here. We made payment, right, of we made this payment on the 28th of May, right? 4,200, which kind of reduces what we owing. So if this is reducing what we owing, then it means that here, obviously, we will say the 11,800 that is recognized here and do what? And acknowledge the amount of money that we paid. So we say 4,800 minus 11,800, sorry, minus the 4,200 that we paid and we recognize on our side, right? And then somehow there was what? There was an invoice, right? An invoice that kind of like we actually were supposed to take note of in our side, but we didn't take note of on our side. Yeah, so if you say 11,800 on your calculator minus 4,200, what do you get? And then the amount that you're getting, then you will say what? You will say the invoice here. Let's see if we can do it on thingy. Remember, there's also the discount, right, that you have to take note of. So if you take note of the discount here, how much are you getting? Let me show you here how they did it. So this is how they did it here. There is the 4,200, right? And then, oh, that's very interesting, because here you notice here they recognized that invoice on the 28th as what? As an error. Is it possible for you to pause the video and find out the reason why this invoice was recognized as an error in the reconciliation statement? I can always just go back and then leave it like that for you to analyze and come up with the reason why it's recognized as an error. So this is the statement on the 28th. And then we have a check here. Okay, so with your answers, I will leave it to you then to come up with the answer, although I have it here. So you are more than welcome then to just like give me the reasons why the 600 has been minus there. Why was it not added? You get it? Because it increases what? The debt. You get it? So here they are telling us that invoice number 34 for 600 on statement, it came to our attention that these goods were sold to sane wholesalers and not us. You get it? So this is an error that they found out along the way, that actually we are seeing that there is a statement. We received the statement there, but they're saying we took goods for 600 rand and we actually didn't take any goods for 600 rand. You get it? So since we didn't take any goods and there is an amount there, it means what? It means that it's not our problem. We didn't make the mistake, but it's what? It's their creditors that made the mistake. You get it? So they are the ones that need to do what? They need to rectify it on the next statement that is coming up next month. I don't know if it makes sense. So you will find transactions like this most of the time. So you will just have to do what? You have to take it out because it doesn't affect us. It's not ours. They made a mistake and took someone else's account, someone else's debt, and put it into our statement. You get it? To make it easy, think of your mom or your dad. The ones that they have a statement, they owing jet. You get it? And then somehow in this statement, there is an amount for a pair of jeans for like 500 rand. You get it? And as far as your parents remember, they haven't taken any jeans at Woolworths. You get it? Or Jet. So it means what? It means that like there is a mistake that Jet made while they're compiling the statements and ended up putting someone else's debt into the statement. You get it? Yeah. So hence now we have what? We, as I was saying, that balance from the statement, it's our opening. And then we minus what? The check. The check, which was like the payment that we made on the 28th. Then we minus what? We minus the error, the mistake that was made by what? By the suppliers. You get it? And then we have a balance at the end, which is 7,000 rand. I hope this made sense. Another way, obviously, because like how you answer would always depend on like the format that the examiner has allocated. Another format on how you can format everything. I know here they just did the minusing here. They just said we minus this, and then you get it. Another alternative way of presentation is that you would have your 3 columns, this side, and then you have your debit and your credit. So we open with a balance, which is a debit balance, right? A debit balance, it means what? Because we are taking it as like correcting this asset account type of a thing. It's increasing on what? It's increasing on the credit, on the debit side, right? And it's decreasing on what? It's decreasing on the credit side of things. So if it's an outstanding check here, it's reducing the balance that is owed. Right? And then this mistake is doing what? It's reducing the balance that they claim we owe. We get it? And then we have what? We have a balance here. If you add all of this, it gives you 11,800. And then this balance comes down here as 11,800.